Hello everyone, welcome to the Market Bites. I'm joined by Josh Gilbert from Sydney, Australia. Josh, how are you doing?
Doing very well, Sam. Doing very well. How are you, mate?
Yeah, good. Tip top. We were just talking before we came on air about stock picks from 10 years ago and how we were exposed to all of these things, whether it be Netflix or Amazon or Microsoft. And we're just thinking, why on earth did we not buy them 10 years ago? And we're trying to get into the habit now of thinking, well, what are we using every day now? What's still going to be big in 10 years' time? So let us know in the comments on eToro or YouTube what you think has got most potential for the next 10 years that you're noticing more and more in your everyday life. That isn't the subject for today, though, that we're going to discuss. We want to talk about the Federal Reserve and when they're going to cut interest rates, if they're going to cut interest rates this year. So we've got a few topics within that we'll discuss. Obviously, had non-farm payrolls recently. You've got US CPI today. You had the tariff updates, US-China talks. You've got corporate earnings, which are all wrapped up pretty much. Decision about the next Fed chair also in the news at the moment, geopolitical risk. So we'll have a look at all of those things, Josh, and then we'll try and make a decision at the back end of it. Sound all right to you?
Yeah, sounds like we're covering all bases. I think we should be able to make a pretty good decision come the end, I reckon.
Yeah, they'll be listening to this, Jerome and the gang. Of course, they've got a meeting next week, next Wednesday. So this time next week, in a few hours, they'll be announcing their monetary policy decision. A press conference follows that as well. So we'll probably find out more from that than the actual meeting. At the moment, we're not expecting anything, no fireworks from the June meeting. But let's start off with the non-farm payroll report, which is every first Friday of the month, as I'm sure many of you are aware. The only time it's not if there's like a bank holiday at the beginning of the week. This was not the case, so we had it. And to be honest, it wasn't too bad. The ADP number, which can be a bit of a precursor for non-farm payrolls on the Wednesday, was poor. It was low, and every non-farm payrolls in our market analyst chat on Google, we always do like a non-farm payroll prediction. And a few people got sucked into thinking, you know what, the ADP number was bad, the non-farm payroll number is going to be poor. And I thought, you know what, that relationship between ADP and non-farm payrolls is so bad, I'm going to go a little bit higher. I didn't win. I was about 17,000 off, but close enough. But a pretty good number. Goldilocks scenario and star report. Unemployment rate stayed the same as well. So you could find theory from that the Fed were right to keep things on hold and there was no reason to cut right now. The labour market is good, under control. And, you know, all five reports of 2025, albeit one is obviously from December, they've all been above 100,000 and no higher than 147. So very consistent. So is there enough in the labour market to worry the Fed? Probably not. And it sort of supports that wait and see approach that they're currently on. So based off of just that, I don't know if there was enough to influence next week, and the change in jobs has been consistent really month on month.
Yeah, I don't think there's anything there really, as you say, to sort of change where they're at, right? I think that strong labour market gives the Fed that breathing room when it comes to holding off on those rate cuts. I think the biggest thing that, you know, the Fed and Jerome Powell have got to sort of try and navigate, and the sort of the pushback, I guess, from the rate cut hopefuls is that inflation, you know, has continued to sort of trend in the right direction this year. And we obviously are seeing other central banks lower rates, obviously on slightly different paths, right? So here in Oz, we've had 2 rate cuts this year, more rate cuts coming, but we, you know, these are the first sort of rate cuts that we've started to see. So again, most central banks are on sort of different paths. And the Fed is clearly taking a more cautious approach, given the potential impacts that we're getting from tariffs on inflation. And I think the thing that may be tough for Jerome Powell is justifying sort of restrictive rate policy if inflation keeps moving lower. Whether that happens, we'll find out a bit more about that this week, of course, as well. But I think we're expecting to see CPI pick up. Headline expected to come in at 2.4% and core at 2.9%. So they're both picking up marginally, but, you know, expected to be driven by modest impacts from tariffs. So that's going to be the big focus, I think, really. And that's the reason why also we are sort of seeing that pushback on, you know, rate cut expectations. You know, the labour market's holding up pretty well, and we are expecting to obviously see that tariff flow through coming through. Probably like to see more of an impact coming through in June. We probably will see a bit of an impact this month. Maybe we might get some commentary around what we can expect. Might hear from Jerome Powell, obviously, as you say, next week as well. But as I say, if that tariff flow keeps coming through, keeps showing up in reports, it will tell us that the Fed's view of sort of sitting and waiting means that it's warranted, and that means we're probably going to get less cuts this year, right?
Yeah, I would go down that route. Trump obviously won't be happy with too late Powell. But that is CPI number later today. Markets to focus on, obviously US equities, and in theory, the lower the number, the better for stock markets, and the higher the number, the worse. Obviously, dollar, gold, bonds would all be affected as well in a sort of a monetary policy reaction. 1 hour before the cash open, that number is released, and then we can talk a little bit about, and use this to make our decision at the end of the podcast, about China-US the trade talks, which took place in London over the last couple of days. Started on Monday. Reports were good. I think Trump said the conversations are tough but good. And yesterday the reports, albeit were similar, and the market finished higher into the back end of the day, albeit on 2 quiet news days other than that. So I would say that's a positive. Ultimately, it does feel like the market's got a bit of tariff headline exhaustion, though, to be completely honest. At the beginning part of the year, and certainly from Liberation Day, the market moved quite heavily off tariff announcements, and individual stocks did it as well. But it now feels like the market's just like, oh, whatever, another headline, let's just move on. This morning I saw that the Eurozone is looking to increase that deadline from July the 9th with US, so keep an eye on that, I guess. But it's another headline just to consider. I guess ultimately, we talk about the impact of tariffs on inflation, and it's still a little bit unknown. And actually, yesterday the World Bank lowered their global growth forecast by 0.4 points versus their January forecast for the year, and that would actually indicate the lowest level of global growth since 2008, outside of recession. So not ideal, to be completely honest. And they cut US growth, they cut Euro area forecast as well, albeit China forecast was left unchanged, and they reckon global inflation is going to reach 2.9% this year, which is above pre-COVID levels given those tariff increases and tight labour markets. So yeah, I wonder how that's going to develop, really. And again, it almost supports the Fed wait and see. Like, let's actually generally wait and see what's going to happen to the market and then react to it. Admittedly, that might be too late by that time, but you don't want to go into this with a guess. So summary, trade talks, US-China seem to be going better than they could, and better than it seemed that they would, a month ago. So that's a positive. But yeah, the impact that it's going to have on growth, certainly from organisations like the World Bank, don't look amazing, and there's a slight worry that inflation is going to pick up to pre or above pre-COVID levels as well. So yeah, it's an interesting one. All said, I'm not entirely sure there's enough out there to make the Fed go, you know what, we need to cut ASAP.
Yeah, no, agreed. And I also think when we look at it from the trade perspective, the reason we are sort of seeing this risk on environment, the reason we're seeing the S&P 500 close in on record highs, the ASX 200 hit a record high today here in Oz, is because we're ultimately seeing a more negotiable Trump. We're seeing him come to the table. There's clearly some view here that we are going to get something concrete from these trade deals, and therefore that tariff impact is going to be a lot less than I think many people may have expected. And then maybe there's a revision then to these growth downgrades, right? That we may be expecting, that big impact to come through on growth. I was having a read of, I think you might have said it in Sam, something from JP Morgan that they'd sent through. And they were sort of saying, look, yeah, we believe that there is going to be an impact to, global growth. Recession risks have risen, but the US economy has remained resilient. We believe it will remain resilient. And therefore there is no sort of real need for the Fed to sort of rush in cutting rates. And I think the best thing for the Fed right now, and they have that flexibility to be able to move if they need to be able to move. And I think that's the beauty of it. And also, in terms of looking at the fundamentals of the market, we've just come off the back of a really strong earnings season. I don't think enough people are really talking about the positivity from tech earnings that were really strong. There were so many question marks over this AI trade going into earnings. And I think they pretty much just delivered a lot of these names, right? We just had TSMC come out yesterday, 40% jump in May revenue. That's just once again reaffirming that this AI trade is in sort of full swing. Mag 7 all increasing CapEx. And I think that, as I say, Microsoft, Google, Amazon, they're all pouring money into new data centers. TSMC expects AI related chips in terms of revenue to double this year. That's massive. When you're seeing those massive firms pour more money into data centers, that's all going straight to Nvidia, and where are Nvidia going to make their chips? They're going straight to TSMC. So that's massive. That just shows that we're going to continue to see that AI trade develop. I think if we look at TSMC, to be very specific, they're increasing their capex as well. They're growing factories in the US, Japan. They're wanting to deliver chips locally as well. We've obviously seen what's been happening with Nvidia and those sort of chip restrictions in China as well. Of course, when you do that, that brings a bit of an execution risk. That brings supply chain risks as well, potentially an increase in costs if you're moving from Taiwan to the US. That could put margins under pressure. But this is a business that basically has little to no competition. They make 90% of the world's most advanced semiconductors. That's massive. So they have that pricing power to just pass costs on to clients. And I think that it just goes to show that what we saw from earnings is that AI is continuing. We mentioned quantum computing earlier, we mentioned cloud computing, everything that isn't slowing down. We're seeing this sort of revolution come through, no slowdown there. And I think we're maybe underestimating the growth that we might continue to see in tech earnings moving forward, because, there's that question mark over valuations. Earnings keep growing, let's maybe put valuations on the back foot when we're sort of seeing what is arguably the biggest tech revolution that we've seen in decades.
Yeah. I mean, TSMC up 2.5% yesterday, and up a little bit in pre-market trading as of 8:40 UK time in the morning. Look, ultimately it does. I have to agree. Earnings have been good. I don't think it's talked about enough. Obviously, the next earnings season will be here in no time as well. But overall, pretty solid. And again, if you're the Fed and you see earnings are good, right? Why do we need to cut right now? Labour market's strong. Inflation's probably under a little bit of control. Trade talks are going all right. Earnings have been good. I don't know. Nothing to worry about. There's always something to worry about. The big question, though, of course, at the moment is who's going to be the next Fed chair. And also, if you remember back end of last year, Trump's comments about creating a shadow Fed, it brings the question to the table. Do we actually care about what Jerome Powell says and Jerome Powell does and the Fed do and say? And I have to say it's making more and more noise in the markets at the moment, where people just kind of like, you know what? It doesn't matter what he does, because this shadow Fed that, Trump's going to create, and whoever comes in as the next Fed chair is more important. And I was looking at the odds this time yesterday, and since or earlier in the week, you had the odds of no announcement about the next Fed chair by the end of this year have dropped significantly. So before the week, they're about 90%. It's now around 50%. So it feels like an announcement could be coming soon. Kevin Warsh is the current favourite of people. But there was a headline yesterday, I don't know if you saw it, about Scott Bessent potentially being the next Fed chair, and his odds have already overnight shot up to second favourite. That's Trump's man, isn't it? That would be, you would imagine, incredibly dovish for the market. I'd imagine also at some point they would end up falling out. And then, that's just what Trump does, isn't it? But I do wonder whether actually now the market, once we get the announcement, which I don't imagine will be too far away, that's the focus on what they do. Whether they're dovish, they're going to be dovish. But what's their stance on monetary policy? That, for me, is going to be more important than what Jerome Powell says next week, to be completely honest.
Yeah, and let's be honest, Trump hasn't exactly got the best view of Powell, is he? He's not exactly been very supportive over time. So Powell probably knows that he's already on the way out at some point as well. He essentially belittles him at every chance he gets, doesn't he? So look, I think that change... What does he say? I know more about interest rates than what Jerome Powell does. Which is just kind of interesting. But I also do think it's funny as well that Mark Carney was Bank of England governor.
Yeah,
Now he's
yeah.
the Prime Minister
PM
of
of
Canada.
Canada, yeah.
Yeah.
Yeah,
Oh, the President of
smashing
Canada.
it. He's
Jerome Powell, maybe go and run the UK.
yeah, bring him in. Bring him in. Can't do much worse than what we've got going on at the moment.
But yeah, I just think that, yeah, look, I think in terms of what you were saying, in terms of like, but does the market really care? Yeah, I think that when we're sort of looking at rate cut expectations, what he's saying, yeah, maybe there's going to be more in this sort of statements, and we hear from like more sort of Fed members rather than maybe what he has to say specifically. And, coming from those Fed members that, maybe hold a bit of a ranking, in the Fed. But yeah, look, it's going to be really interesting to see how it sort of plays out over, the next couple of months, especially with that, back and forth with Trump and Powell, because obviously Trump's saying cut rates, Powell saying, well, I have to wait now because you've just put through all these tariffs that we don't know how it's going to affect inflation, mate. So give me a break. How about that? So I think it's going to be really interesting to see how that plays out.
Yeah, I feel sorry for Jerome Powell sometimes, but it's a thankless task, and I'm sure he'll be well looked after he's finished his term at the Fed and be charging silly money for speeches around the globe. So hopefully he'll be deservedly, absolutely. Look, we still got a bit of geopolitical risk around the world, not worth considering that. It still remains there, and I don't necessarily think it's going to influence what the Fed decide to do or decide not to do, but it is worth considering that and keeping an eye on headlines every day, to be honest, to see how they develop, whether that be in the Middle East or into Russia and Ukraine and all of that. I think it's worth considering because any escalations there can change the the landscape. But at the moment, I think that's okay. But just before we answer whether the Fed are going to cut this year, Josh, what are the sort of expectations that markets are showing us?
Yeah, and it's interesting you mentioned about sort of like geopolitical risk, and it's just like another added layer of uncertainty, isn't it? Like sometimes we'll obviously have a chat in our analyst chat, and it's almost sort of laughable the amount of uncertainty that you do have in markets right now. Like I think if you go back 10, 20 years, and there's probably more people that are better to speak on this than maybe me and maybe you as well, but it's so hard to think about a time when you just had so many different movable parts in terms of uncertainty, and like a president who could just when you think back about Biden, like maybe he wasn't the best person to run the US, but you kind of knew what you were getting. The taco trade is just hilarious as well, isn't it? Because you just know that he's absolutely seething about that. And the worry was that when that came out, the amount of stuff I was reading on Bloomberg was like, no, you don't poke the bear. Like, don't do it. Like we were getting close to getting a trade. Like imagine a journalist just rattling Trump and just going, actually, do you know what? China can have 140% tariffs again. Right? Just like the change in world peace just because a journalist mentioned something. But in terms of those rate cut expectations, Bloomberg pricing has rates falling just once this year. That cut looking most likely in October. Look, there is a decent chance they do see room for more than one cut. But for now, it's sitting at the view of just mainly going to get one cut. And I think it will be more around that sort of, August, September, October period. We'll know a lot more on tariffs, inflation, jobs data is going to be coming through, which, as we know, has been pretty solid as of late. And I think that's when we could see those rate cut expectations change pretty significantly again after the summer. So for now, they have it at one, with a decent chance that we might sneak another one in there, but it is just sort of really looking at one for now.
Interesting. I mean, last week we discussed Lululemon, and of course, look, one earnings report doesn't guarantee the future success or failure of a company, but we both said we don't see it becoming as big as Nike. And then everyone in the world must have listened to the podcast because they had a poor earnings report and then they dropped significantly, didn't they? So people listen to the market price is what I'm trying to say. So with that said, everything said, this conversation we've had, your view on when do you think the Fed will cut?
I think
if they will cut.
Yeah, I definitely think they will cut. I personally don't think I think we will come to a bit of a better resolution on a trade perspective and a tariff perspective than I think maybe the bears are thinking. So I do think we will get a cut later in the year. I will say October because I think we'll wait to sort of see how it plays out. I think as I said, the economy will be a little bit more resilient. I think the jobs market will hold up, but I think they'll have room to cut around October. But I think they'll consider another cut before the end of the year.
Yeah, I mean, gun to my head, I'd say, you know, we get one. There is a growing part of me that believes we don't get any. I just don't feel confident enough to say that with my chest that we're not going to get a cut this year. I feel like we'll get one. And also, by the way, do expect comments from Trump next week when the Fed keep things on hold. And, you know, he talked after the ECB cut last week and said they've done it 9 times. They've done it 7. But the point remains that he will speak up about it, won't he? And he'll put the pressure on the Fed to deliver. In fairness to them, they're almost not listening to Trump, which I rate. But I think we get one. But I think there's a growing part and a growing percentage chance that we don't get any. I mean, if the market carries on like it is, there's almost no reason to cut, is there? So we'll wait and see. But yeah, I think we'll agree on one, and then we'll see how the summer goes, and we'll discuss that, of course, in detail over the next few months. But Josh, as always, thank you very much.
It's been a pleasure, mate. See you all next week.
Take care, everyone. See you then.